bang, gold goes to 5,000. In this scenario, here's the important part. It's shocking to me, and it makes my disdain for the legacy media grow by the day. I don't think this is panic. This is a sober reality. Confidence in the dollar is slipping, and gold and silver, with its long-term, I expect that the price of gold only goes higher, because as Michael Oliver, who you have on your show all the time, he's talking about
gold is smashing records again. But Andy Schectman says this is just the opening act. The mainstream calls it a rally. But Andy, he calls it the start of a monetary earthquake. Why? Because gold isn't just going up. It's telling you that every single paper currency is going down. And silver? Andy's got a bold call. It could rocket to $70 an ounce this year. That's right, $70. The metal that Wall Street laughs at might end up laughing back. And here's the wild part. Andy says this isn't just about price, it's about power. Central banks are dumping U.S. treasuries and hoarding gold like it's the last pack of water in the desert. The dollar's grip on the world, slipping, gold and silver, rising to take the crown. According to Andy, we're not watching a normal market cycle. We're watching the early chapters of a reset, one where gold could reprice higher than most people can even imagine, and silver might finally break free from decades of suppression. So the question isn't, is it too late? Andy says the real question is, are you ready before the train leaves the station?
No one really is talking about it, which is kind of crazy. And, look, I think it's most important to understand that this is not gold going up. It's mostly currencies everywhere depreciating against gold, not just the dollar, but all currencies. And I don't know, it's not only a normal bull market, which I see very clearly, but it's also a monetary system reset, which I see very clearly. And when you see an environment where foreign governments and central banks hold more gold than U.S. treasuries, it's a sign that they trust gold more than they do the dollar and our debt. This is a big deal. This is a monetary reset. This is a reshuffling of the deck. I think people need to understand that. It's crazy that this isn't all over the mainstream, that this isn't spoken about. It's shocking to me, and it makes my disdain for the legacy media grow by the day. Look, our massive debt means that we will almost certainly rely on money printing to pay it back, which erodes the value of the dollar. Foreign holders of our treasuries and our dollars do not want inflated dollars, so they too are shifting into gold. And it's because of the credibility, the liquidity, the physical security. This is what has shifted gold's bull run from $1,700 to $3,500 an ounce in just the last 3 years. And then at the same time, you got momentum building with guys like Putin and Xi and Modi, who are openly urging trade in local currencies, which again are laying the groundwork for a world less dependent on the dollar, Don, again. And that's, this is what it is. It's not so much gold, it's the dollar. It's everything. Gold is the barometer by which we measure everything else. And when you have a treasury that is projecting well north of 22 to 25 trillion in debt in the next several years, with our foreign creditors who have supported our lifestyle backing away, I mean, I don't know, isn't it always been the Fed that stepped in and with more money printing, risking inflation? I don't think this is panic. This is a sober reality. Confidence in the dollar is slipping, and gold and silver, with its long-term 5,000-year track record. Speaking of 5,000, that's the number that we're getting out of Goldman Sachs if just 1% of the money that's in treasuries pulls out of treasuries. Bald Guy Money did an interesting one, and he said if 20% pulled out, he was getting $9,000 gold. And it wouldn't surprise me. And then they revalue it. The higher the price of gold goes, only benefits this country on many levels, not only through the devaluing of the dollar, but also, of course, the ability to, if Judy Shelton is right, peg gold to the back end of the treasury. This will probably, I doubt people would get this, maybe people watching your show, but if you bought what do you think was the best performing asset if you bought the day Nixon closed the gold window on August 15th, 1971? Well, obviously I'm asking the wrong crowd, but number one was gold. Number two was the S&P 500. Number three was the Dow Jones. Number four was silver. And this is including reinvesting every dividend for compounding gains, which no one ever does. Investors never do that. But if you had invested every single dividend for the past 54 years, gold is still outpaced the Dow and the S&P. Silver came in just behind those at number four, but it goes to show the old adage that Wall Street wants us to believe that because there's no yield on gold, you should have known it. It's actually a joke. Yeah, in just about anything that you measure it against, in all valuations, don't measure it against the dollar, measure it against gold, and you'll see in terms of gold, things are getting cheaper. And I expect that the price of gold only goes higher because, as Michael Oliver, who you have on your show all the time, he's talking about a real massive capital rotation from Western mainstream legacy investment stocks, bonds, etc., into precious metals. He says this happens but once only every 50 years. Doing a little bit of reading this weekend, found it very interesting that before Scott Bessent became the U.S. Treasury, he wrote this. I'm going to read it from his January 2024 Key Square Capital Management letter. And then I want you to think about where we are right now today and his role in all of this. We believe that this, and again, he was writing this for a letter. He was a capital management letter that he was working for in 2024. We believe that this inappropriately easy policy, monetary policy they're talking about, inflated the dot-com equity bubble. Our best case is that a re-elected Donald Trump will want to create an economic Lollapalooza and engineer what he will likely call the greatest 4 years in American history. In this scenario, here's the important part. The greatest risk factor, in our opinion, would be a sudden rise in long end rates. I find it interesting. I think this explains why he's so much into gold. And, this is where we're going. This is the path that we are heading on. I also found it interesting that Bessent just also advocated for a comprehensive independent review of the Federal Reserve. He called for scrutiny of the entire operation, its monetary policy, its regulation, its staffing, its communications, blah, blah, blah. He argues that the Fed has strayed beyond its mandate and needs to regain credibility as a non-political institution. He said that the Fed should relinquish its banking supervision duties and limit economic intervention, particularly unwarranted bond purchases outside of crises. But this aligns with President Trump's effort to increase influence over the Fed. So if that happens, you look at Stephen Mirren being put in and Trump's attempt to sever the independence, if you will. Isn't that exactly what Goldman Sachs was warning about? That the political control harms its credibility, increases inflation, undermines its trust. Bang, gold goes to 5,000. So it's happening right now. I mean, you can see it as being undermined. And so, I think that one should expect gold to go much higher in the face of a dollar going much lower and the Federal Reserve losing independence, as Goldman Sachs has so eloquently spoke of. Yeah, that's just it. It's not shifting gears a little bit. We've talked every single month since the beginning of the year about all of the gold being delivered into COMEX. Not all of it is leaving. A lot of it is. So far, there's been just shy, 3,626 contracts. I read this over the weekend, so I don't know how many more have stood for delivery. That's $1,305,360,000 worth of gold in just the first few days of the September contract. At the same time, there was 10,599 silver contracts delivered. That is worth 2,225,790,000. So, I mean, every single month there's billions and billions and billions coming in, and before it's all said and done, it'll even be more. People wonder ways by which they hold the price down with all of these deliveries. One of the ways is through GLD and SLV. In SLV right now, the short position, which is controlled, by the way, SLV by custodian, is BlackRock and JP Morgan. The short position in SLV increased by almost 20% to 53.97 million shares. And as Ed Steer says in his own words, this is fraudulent beyond deception, as there is no physical silver backing any of it, as the SLV prospectus requires. Crazy, to be honest with you. It truly is. You look at a period of time where all of this metal is coming in, where deficit spending has gone so far out of control that the Fed is really losing control of interest rates, in my opinion. And the U.S. has issued over $200 billion of bonds in 5 weeks. Then again, we're reaching a point where investors don't want to buy U.S. government debt at current yields. And let's talk about what's happening around the world. In the UK, 30-year bonds have broken above 5.7%. for the first time since 1998. But the crazy thing about that, think about what Trump wants to do, right? Remember last time the Fed lowered rates by 100 basis points, what happened to the 10-year? It went up by 100 basis points. Well, the Bank of England has cut rates 5 times this year and ended up with rates at a 27-year high. How the hell does that happen? So the market is literally rejecting interest rate cuts due to deficit spending and inflation. So when the Fed cuts rates in 2 weeks and blames a weak labor market, are we next? Is this going to happen to us?
If you thought Andy's $70 silver call was wild, wait until you see what's coming next. Don't just sit there like Wall Street pretending nothing's happening. Hit that like button so the algorithm knows the truth matters. Smash subscribe before silver smashes through the roof. And for heaven's sake, tap that bell icon, because when gold makes its move to $10,000, you'll want to hear it here first, not 3 months later on the evening news.